Hi, thanks for tuning in. This is the ASX and Sectors weekly chart analysis for the week ending 13th of February 2026. The first chart is the S&P ASX 200 index, the XJO. This is the parent index of the Australian Stock Exchange. Put some lines in quickly, make the chart come alive. You can see that the market closed higher this week, right at this level where price has been consolidating sideways for a little period. There was some supply drawn out. Price moved higher on pretty good volume and up to this level. It's not the highs of the range, which come through here, but close to it, and it's drawn out some supply effectively from the left here. It's probably stale supply from the left, and that may require some absorption. The recovery to a large degree, as you'll see as we move on, was due to the financial sector, which has been lagging considerably and holding this market back in particular. And they really accelerated higher this week. This is the mid-cap sector. It really traded just inside the previous bar's range for the entire week, moving higher and then fading lower. Volume was pretty high, so there was supply in this market, there's no doubt. You can see last week the market was threatening to break down, and it didn't really do so. It's attempted to move higher and then faded lower on higher volume than may be considered ideal. So there is some pressure in the market, but there was still enough buying support to push the price higher, at least initially. So the market's looking vulnerable, but it hasn't clearly broken down at this point. Small ordinary sector, very similar to the mid-caps. They've attempted to push higher and then closed lower. Slightly lower volume on this, but still above the average. Price isn't quite flirting with the lows of the range, and the fact that this week's bar still closed as a slight up bar was a minor positive. Similar to the mid-caps, this market attempted to move higher and then faded lower under pressure from some supply being drawn out and weakness in markets generally. This is the financial sector. It's been holding back the parent index for some time more recently. Here's the highs of the range. Here was the initial breakdown, lows of that range. You'll see that the market has really accelerated higher this week, right up to the highs of the range, closing at that level, powering through any potential supply to the left here on pretty high volume. This was a strong move. You would generally expect the market to consolidate in response after a large gain over a relatively short period of time. The market will normally consolidate, and you would like to see it as high as possible within this range. In the classical terms, you'd like to see a bull flag form like that in there. But a consolidation within the range from here to about here. The higher up within the range the consolidation takes place, and the shorter the period it takes to consolidate before price can attempt to move higher again and above this bar's high, the stronger the market will be, or the stronger the market's inferring it is. So what you'd like to see now is a period of consolidation that's short and sharp, and then an acceleration higher. This is the metals and mining subsector. It staged a modest recovery this week. Here's where the market's been moving higher. Some weakness emerged here. Price pulled back in response, possibly a little overdone. The market's attempted to recover this week. It's traded within the range of that previous down bar for most of the week, and it did close within that bar's range and sort of at the highs through there. That'll be the highs of the range through there. So it's closed at a logical level just below where the market would be considered to be breaking out again. I would expect a little period of consolidation in here, short and sharp again. And then if the market is strong and supply is found to be low, there may be an attempt to move higher in response. This is the Australian gold sector, and similar to the metals and mining market to a large degree, the market has been moving higher, pushed up here, some weakness emerged there, price came back in response, may have been slightly overdone, closing just below that level. The market staged a recovery this week, trading within the range of the previous bar for most of the week and closing within that bar's range. Volume was only modest this week. It dropped back to about average, so it does appear that selling pressure has eased to a decent degree, and that allowed the market to push higher, at least initially. There was some supply drawn out later in the week here. In that case, you would see an attempt to consolidate in response, probably above that line and within the range of this week's bar. And once again, preferably high up within the range if possible and over a relatively short period of time. This is the ASX energy sector, and the market is consolidating just below the highs of the range. Highs of the range come through here. You can see that after all of this contrived trading we've seen for an extended period of time through here, the market's eventually pushed back up to the highs of the range 3 weeks ago, came back and consolidated within the range of that bar for that week, and it's done a similar thing this week. It does look like selling pressure is beginning to ease. So this is the market absorbing supply just below the important level, which is the highs of the range. And it's leaving the market well placed to issue a challenge to that level when trading conditions are considered favourable. You can see that all the trading over the last 2 weeks has pretty much been within the range of this up bar. There's no serious weakness. The lows of that bar haven't really been challenged. And the overall push higher is from here to here, like that. So we're forming some sort of bull flag, you might say. The market is consolidating in here. And if that's successful, the market will push higher in response, or at least attempt to. At this point, the market is still consolidating, and we're waiting to see whether the market has got enough strength to move higher in response. This is the healthcare sector. Once again, the healthcare sector was attempting to consolidate, and it's broken down again. We've been following this for a while, and I have lost trust in it to some extent. It did appear to be consolidating through here and then failed. Then it attempted to consolidate again and then failed, although not too bad that time. It attempted to consolidate sideways here and it's failed again. This was a pretty serious pullback and breakdown. Volume wasn't particularly high considering the previous volumes were, I guess, about the same. It's not a climactic bar as far as the volume goes, so we'll have to just watch for that and just see what builds from it. But at this point, this market can't be trusted, and you need to watch this market. This bar does look climactic, but the volume doesn't suggest it is yet. So just wait and watch. And probably best to not get involved at this point in time. This is the ASX industrial sector. It staged an attempt to recover this week. Wasn't particularly convincing. Here's the lows of the range. You can see the market was threatening to break down last week, and it didn't break down. It's attempted to recover. The recent trading's been within the range of this bar here. It did look like the market was doing a pretty good job until a couple of weeks ago. You can see that supply has been drawn out here. volume reduced slightly. So that's telling you that the buyers aren't particularly strong here. The market remains vulnerable at this point in time. Just so you can see, pretty obvious, highs of the range through there, lows of the range at this line here, and the market's looking vulnerable. This is consumer staples. This market did push higher this week. Lows of the range down here, highs of the range through there. Next range higher begins here. The market's pushed up to that level. It's drawn out some supply, there's no doubt. But you would expect there'll be some stale supply to the left here. And that's what it's attempting to push through and absorb. So you would expect to see some consolidation in response, perhaps early in the week, and then a secondary push higher if the supply isn't particularly strong. Consumer discretionary. Market closed lower again this week. It is reluctant to move lower here. There's the lows of the range. And last week it was threatening to break down. It attempted to recover. It's faded lower again on pretty high volume, to be honest. But the push lower, the thrust lower, isn't particularly wide. It's still an attempt to break down. There's no convincing breakdown at this point in time. The market appears reluctant to break down. It may do so in the end, but it's reluctant to do so. And if there's any chance of some favourable trading, it'll probably attempt to recover. That may fail, but it may attempt to recover before it actually does break down. So we'll just see how this market plays it. It's looking vulnerable, there's no doubt. This is the property sector, and it broke down last week and staged somewhat of a recovery this week. You've got the highs of the overall range through here and the lows through there, lows of that range there. Price broke down last week. It's attempted to recover. It wasn't a particularly strong attempt, even though volume was pretty high. The close was well off the week's high, so supply was being drawn out, and that's caused the mid-bar close. Still within the range of the previous down bar. At this point, it looks as though this market will fail to recover, and it'll probably try to go sideways in here for a bit. A push below that level, the 1700 level on this chart, would show prices broken down again. The market's probably going to attempt to recover. It's going to go sideways like this and like this, but it's not looking strong. Just back to the parent index quickly. The recovery this week was mostly due to the financial sector, in particular the big four banks and the very large mega cap stocks in the market. Price pushed up to the highs of the range. Highs of the range come through here, and the market's pushed up to this level this week. And closed right at the important level there. It's still got some work to do to get up to the highs of the range, but it did tag it this week and has gone through a little period of absorption in there, which will open the door to an attempt to push higher in the future if it's successful. I would expect a period of consolidation in here early next week. And then if supply is found to be low, an attempt to push higher. And if supply continues to be drawn out, price may fade back towards the lows of the range here. Okay, thanks for your time. Now next week, I'm going to be interstate for the next 2 weeks. There probably won't be a weekly report for the next 2 weeks. Although if some sort of unexpected event occurs, and I think that it's really worth some sort of video, I'll try to put something up while I'm away. Barring that, I'll see you in 3 weeks' time. Thank you. See ya.